Stop everything. Close the other tabs, turn off the music. I need 3 minutes of your complete attention because what I'm about to reveal will either save you from financial disaster or you'll ignore it. And 6 months from now, you'll be sitting there wondering why you didn't listen when you had the chance. This isn't clickbait. This isn't theory. This is what's actually happening right now in Bitcoin markets while everyone's distracted by headlines and hopium. February 11th, 2026. Bitcoin just touched $67 thousands, down 47% from its all-time high 4 months ago. But the percentage doesn't matter. What matters is what that number is screaming at anyone who knows how to listen, and what it's saying should terrify you. 4 months ago, Bitcoin was at 126,296. Everyone was a genius. Your Uber driver was explaining DeFi. The barista at Starbucks was talking about layer 2 solutions. That's always the sign, isn't it? When everyone thinks they understand crypto, that's when you should be running for the exits. But nobody ran. Everyone held. Everyone believed. And now half the value has evaporated like it never existed. But here's what's keeping me awake at night. Here's what nobody's telling you. This isn't just another correction. This is the beginning of something that's only happened twice before in Bitcoin's entire history. And both times, people either positioned themselves correctly and became millionaires, or they did what their emotions told them to do and lost everything. Let me tell you about Michael. Not his real name, but a very real person. Actually, he's a composite of 200 messages sitting in my inbox right now. Michael bought Bitcoin in October at $118,000, put in $5,000. Money he could afford to lose, he told himself. Everyone says that. By December, that $5,000 was worth $3,800. He held. Diamond hands, right? By January, $3,200, still held. Then February 6th happened, 3:47 in the morning Eastern Time. Bitcoin touched $60,060. Michael's $5,000 was worth $2,540. He'd lost more than half, and that's when Michael sold. Couldn't take the pain anymore, locked in a catastrophic 50% loss. 3 days later, Bitcoin was back at $71,000. If Michael had held for 72 more hours, his money would have been worth $4,200. Still down but recovering. Instead, he sold at almost the exact bottom. Now here's the question you need to ask yourself. Was Michael unlucky? Did he just have bad timing? No. Michael is a statistic. Michael is exactly what was programmed to happen to him. Michael played his role perfectly in a game he didn't even know he was playing. The market doesn't take your money. You give it away voluntarily by doing exactly what your psychology programs you to do. Buy when everyone's excited and you feel safe. Sell when everyone's terrified and you feel scared. Right now, the fear and greed index is at 37, fear territory. Not extreme fear yet, but getting close. And here's what's fascinating about human behavior. When that index is at 80, showing extreme greed, that's when retail investors feel safest. That's when Michael bought. That's when your coworker mentions crypto at lunch. But when it drops to 20, showing extreme fear, that's when those same people capitulate. That's when Michael sold. Institutions, though, they do the exact opposite. They buy at 20, they sell at 80. They're buying your fear and selling you their greed. So when I look at Bitcoin at 67,130 taels, down 47% with fear building, I'm not asking should I sell. I'm asking a completely different question. How much lower will fear push this before smart money steps back in? And there's a specific number, a line in the sand, $56,000. That's the level that determines everything. Below us right now, we have several support levels. At $65,000, we have the Fibonacci retracement. If Bitcoin breaks below 65 and stays there for more than 3 days, that's a structural break. Then we have 60,000. We already tested it on February 6th. We bounced hard, 11% in 24 hours. That tells us there's buying pressure there. But here's what most people don't understand about support levels. They're like a wooden door. You can slam into it once, maybe twice, but eventually if you keep hitting it, it breaks. We've tested 60,000 once. If we test it again in the next 2 weeks, I don't think it holds. Each test weakens the support, and that brings us to 56,000. This is the Alamo, the last stand. Back in March 2024, Bitcoin spent weeks at this level. Billions changed hands here. That creates memory in the market. If Bitcoin breaks below 56,000 with conviction, with high volume, and stays below for a week, we're going to 40,000, maybe lower. Above us, we have resistance, ceilings. At 74,150, we have the 20-day moving average. Bitcoin needs to reclaim this and hold it for 5 days to show any trend reversal. We're below it now. That's bearish. At 89,361, we have the 50-day moving average. If Bitcoin can break above this level, it would signal the trend is changing, but we're $22,000 away. And remember, 62% of all ETF holders are underwater. Their average entry is around 77,000. When Bitcoin rallies back to that level, they're going to sell. Break even and get out. That creates a massive ceiling of supply waiting to dump on any rally. Let me show you something almost nobody's talking about, the RSI divergence. The relative strength index measures momentum. Right now it's at 37, getting oversold. But what matters is divergence. Look at 2015. Bitcoin's price made lower lows, kept dropping, but RSI made higher lows. The momentum of selling was slowing even though price was still falling, like a car rolling downhill but decelerating. When Bitcoin showed this divergence in 2015, it bottomed at $150 in January. By December 2017, it was at $20,000. Same thing in 2019. Divergence formed. Bitcoin bottomed at $3,200 in December 2018. By November 2021, it was at $69,000. Right now, we're seeing early formation of potential divergence. Bitcoin made a low at $60,062 on February 6th. If we retest that level or go to $55,000 but RSI makes a higher low, that's your signal. That's the market telling you the worst is over. But it hasn't formed yet. We're in the process, which means one of two things happens in the next few weeks. Either we hold above 60,000, divergence confirms, and we start grinding higher, or we break below 56,000, divergence fails, and we're going much lower. For the next month, you need to watch RSI like your money depends on it, because it does. Now let me connect dots nobody's connecting. February 3rd, 2026. Silver crashed 30% in one day, the worst crash since March 1980. Silver has been money for 5,000 years, and it lost a third of its value in 24 hours. Why does this matter for Bitcoin? Because they're both alternative assets, both stores of value outside the traditional system. When silver crashes that hard, it tells you leverage is being unwound across all alternative assets. We're in a deleveraging event, and Bitcoin doesn't escape. It gets dragged down with everything else. Bitcoin correlates with three things: tech stocks, precious metals, and general risk appetite. When all three are under pressure simultaneously, Bitcoin gets destroyed. Microsoft earnings disappointed. Stock dropped 10%. Tech ETF down 1.8%. Silver crashed 30%. Gold under pressure. This is a macro event, not a crypto event, which means Bitcoin's recovery doesn't depend on Bitcoin news. It depends on the broader market recovering. And if the Federal Reserve keeps rates elevated, if Kevin Warsh comes in hawkish, risk assets stay under pressure indefinitely. February 2nd, 2026. $2.56 billion in liquidations in 24 hours. When you trade with leverage, there's a price where your position gets automatically closed, liquidated. When thousands of positions liquidate simultaneously, it creates a cascade. Death spiral. Prices drop, triggering liquidations, causing forced selling, making prices drop, more triggering, more liquidations. Bitcoin dropped from $71,000 to $60,000 in hours. $2.56 billion in longs got obliterated. But here's what matters. Liquidation cascades create bottoms. Once all the leverage is flushed out, there's no more forced selling. Only actual holders and new buyers remain. November 2022, 1.8 billion liquidated. Bitcoin bottomed at 15.5 within days. June 2022, 2.3 billion liquidated, bottomed at 17.6 within a week. March 2020, 1.6 billion liquidated, bottomed at 3,800 and never looked back. The fact that we just had a 2.56 billion liquidation event and Bitcoin is still above 60,000, that's actually bullish. It doesn't feel bullish. It feels like the world's ending, but all the weak hands just got violently shaken out. Here's your timeline. March 2026, next month, decision time. By March 31st, we'll know if 56 to 60,000 holds. If we're still above 60,000, probability of recovery increases dramatically. If we've broken below 56, we're heading to 40 to 45 next. Watch the RSI. If divergence confirms by end of March, that's your signal. April through June, second quarter, the healing phase. If we bottomed in March, Q2 is slow grinding recovery. Bitcoin trades sideways between 60 and 80 for 3 months. It will test your patience. You'll be tempted to sell because nothing's happening. But this is where positions get built, where smart money accumulates while retail gets bored. July through September, third quarter, trend becomes clear. We'll have 6 months of data. We'll know what the Fed's doing, if institutions are accumulating, if regulation is helping or hurting. Bitcoin either breaks above 89,000, establishing new uptrend, or retests lows and breaks down further. October through December, fourth quarter, the inflection point. Historically, Bitcoin bottoms in Q4 after a peak. 2018 peak led to 2019 Q4 bottom at 3,200. 2022 peak led to 2022 Q4 bottom at 15.5. If pattern holds, 2025 peak leads to 2026 Q4 bottom between 25,900 and 30,350. I'm not predicting 25,000. I'm showing you what's possible based on historical 80% drawdowns. But if Bitcoin hits 25,000 in December 2026 and you believe the April 2028 halving drives another bull market, that's the opportunity of a lifetime. 10x from 25 is 250. Stock to flow model predicts 300 to 500,000 after 2028 halving. So here's your framework. If you believe Bitcoin goes higher long term, dollar cost average, buy at 67, buy at 60, buy at 50, buy at 25 if we get there. Never go all in, never try timing the bottom. Just keep buying mechanically without emotion. In 2028, when Bitcoin's at 150 or 200,000, you'll realize it didn't matter if you bought at 60 or 70. What mattered is you bought and held. If you're uncertain, set alert for 56,000. If it breaks, sell everything and sit sidelines. Wait for confirmation. RSI divergence, stabilization, institutional inflows returning, then buy the confirmed uptrend. You won't catch the bottom. You'll buy at 70 or 75 on the way up, but you'll have conviction because trend is your friend. This is risk off. You make less but sleep better. If you think Bitcoin's going to zero, sell now, right now, all of it. If you don't believe in fixed supply, decentralization, store of value thesis, you shouldn't own any. Get out. Put money somewhere you believe in. Because staying in an asset you don't believe in is how you make emotional decisions. And emotional decisions are how you lose everything. Bitcoin isn't just technology. It's not just an investment. It's a referendum on the future of money. The dollar lost 98% of purchasing power since 1913. The Fed can print unlimited dollars. Governments can seize accounts. Inflation erodes savings invisibly. Bitcoin? Only 21 million ever. No government can print more. No central bank can inflate it away. If you hold your keys, no one can seize it. So when you watch Bitcoin drop from 126 to 67 and feel scared, remember volatility is the price you pay for freedom. Gold's been a store of value for 5,000 years. Doesn't move 10% daily, but you can't send $1 million in gold across the world in 10 minutes for $2. Bitcoin's 15 years old, still figuring itself out. Volatility will decrease. It always does. Bitcoin volatility 2011 was 200%, 2015 100%, 2019 80%, 2023 65%, 2026 probably 50%, getting more stable as institutions adopt, people understand, use cases emerge, but we're still early. Still in the phase where fortunes get made and lost, still need conviction. In 2011, Bitcoin was $1. People bought at 50 cents, watched it crash to 10 cents. 90% loss, sold. Bitcoin is dead. 2013 hit 1,200, crashed to 200. 83% loss, dead. 2017, 20,000 crashed to 3,200. 84%, dead. 2021, 69,000 crashed to 15.5. 77%, dead. 2025 Bitcoin hit 126,000. Now 67. 47% loss. Are you selling or remembering Bitcoin's been declared dead 473 times and came back stronger every time? Here's what you do. First, breathe. Stop reacting emotionally. Second, look at your position honestly. Can you afford to lose this? If no, sell enough to get comfortable. Third, set alerts. 56,000 for support, 74,750 for resistance, 89,361 for trend change. Fourth, check RSI weekly for divergence. Fifth, decide your strategy. DCA, lump sum, or sidelines. Then commit and stop second guessing. Most important, turn off the noise. Stop checking hourly. Stop reading every headline. Stop listening to random Twitter accounts. Make a plan based on conviction and risk tolerance. Execute methodically. Trust the plan. Everything else is noise designed to make you emotional. Here's my challenge. Come back September 2026, 6 months. Comment where Bitcoin is. Did it break 56? Rally above 89? Something unexpected? And tell me what you did. Panic sell? Buy the dip? Sit paralyzed? Because in 6 months, in a year, in 2 years, this moment right now will be remembered one of two ways. The moment you panicked and sold at the bottom, locking in catastrophic loss. Or the moment you had conviction to hold through the storm, maybe buy more, position for generational wealth. Which one? That's your choice. Nobody can make it for you. Most people are Michael. Buy high, sell low because emotions drive decisions. Don't be Michael. Be the person who understands biggest opportunities come dressed as disasters, who thinks in years, not days, who stays calm when everyone panics. That's how wealth gets built, not by luck, by discipline when it matters most. The next few weeks will separate the Michaels from the millionaires. Which side of history will you be on?